Hey, good afternoon.
Hey, good morning on my end.
Yeah,
Still trying to wake up.
go get some coffee.
I actually did. Hasn't kicked in yet. Gonna wait to see if anybody else joins before I get started here.
Yeah, would be a shame if it's yeah, day two and everybody quits.
True that. Let's see.
I guess there are just more like NA people.
Say it again.
I think there are just more US people like for the night session.
Yeah, it's normally. I mean, now we got a pretty decent mix. Um, but a lot of people have messaged me saying, talking about their time zones and stuff. So definitely a lot of time zone issues regarding
Mm.
these sessions.
How do you manage it? Like do this session and then do another session while we're actually asleep?
Yeah. Yeah, I actually did a session last night for me that you can find in the recorded sessions. So I'm doing basically a session whenever I wake up and then a session later on in the evening. And then whichever one that, whoever misses, then they can just refer to the recorded sessions.
Yeah, I do that too, but I kind of have to mix them up. So we have this session now, and then after I'm going to watch tonight's session. So yeah,
Okay.
it's kind of mixes with each other.
Yeah, a little bit. Let me see real quick. So I was trying to fix the blurry issue. And it looks like I have, but it's still saying that my bit rate is too low.
Mhm. Yeah, on my end it says your video is 720p, but the numbers look pretty clear.
You should be able to change it to 1080p down there in the settings.
Yeah, it did it. It shows 720 automatically. Yeah, now it's even clearer.
Sweet. I think it'd be clearer, even I think it'd be like really clear if I changed my bit rate, but I can't do that during the stream. So next stream though, I should be able to change my bit rate because I guess that affects clarity for some reason. What I'm actually doing now is just because I can't stream in 4K, YouTube won't let me. So I'm actually streaming just in HD. So what you see is just part of my screen, but that way it's nice and clear
Yeah.
because nobody could see the numbers, which I wasn't aware of till last night.
Yeah, it can be it can be kind of handy when you're like how do I say it? When we're like copying what you're doing like after the video, so we can compare
Oh yeah,
the
it's
results.
it's definitely useful to actually see the numbers because people were asking me like, yeah, what is the drawdown showing or what's the profit? I'm like,
Mhm.
well, y'all can't see that.
Um,
Sure enough, good.
Yesterday it was pretty hard, but now I can just read it like very clearly.
Awesome. Making some progress over here.
Yeah, we all are.
Okay, I guess we can go ahead and get started.
Yeah, okay, I'll mute my mic.
Okay. So yesterday we went over several different variations of the orb pattern to see which one performed the best. And this was our end result so far. I can go ahead and show the chart. So here's just an example of one of the trades. And our current setup is once the 30-minute range is established, so 30 minutes after the open, we enter when price closes above the opening range. And then we have two exit conditions. We tested many different variations, but the one that outperformed all the others was using this variation where we use the ATR stop, which is this trailing blue line, to exit our trade only if it's not for a loss. So in the money, so to speak. That's why the ATR didn't get us out right here or right here. And actually didn't get us out at all, because once price finally started moving up a lot in our favor, it just went ahead and closed whenever the market closed. So kind of best case there, where we pretty much almost extracted all the potential profit. But so the ATR stop we're using for our exit in the money, and our exit for a loss is the bottom of the opening range. So once we came to this, we wanted to evaluate why this might be the case over a larger sample size. And I made a quick illustration. So for example, if we have an opening range and price breaks above it, we tested various lines. We tested whenever, as far as exiting for a loss, we tested whenever price crossed below the opening range high, the midline, so I'll go ahead and use purple for that, and the opening range low. We also used the open price, which was, anywhere within this range. But after testing these multiple lines for exiting for a loss, using this opening range low proved superior. And what that means is that more often than not, price likes to break this opening range high, fall back into the range, and just dance around for however long it wants to without breaking this open range low and eventually moving into our favor. It's because this happens so often that it gave us the best results that we're seeing here. And now that we've figured this out, this gives us a lot of potential for a future variation to use the break above the opening range high as a leading indicator. And what that means is when price breaks above the opening range high, instead of entering, we could wait for an additional setup that takes place inside the range and still risking that opening range low, and then holding for a breakout and a move upwards. But that won't be this current strategy. That could be another variation that adds some diversification for this setup. So now that we got some review out of the way, we can move on to what we're going to be looking at today. So let's see, let's go ahead and write this opening range again. We're going to illustrate the issue that we might be encountering many times with this setup. Because right now we're already, very profitable over this sample size. 88,000 with my net drawdown of 3,700, which I think is a profit to drawdown ratio of like 23, 20 something. And we could look at some equity curves right quick. YM, RTY is going to be the worst, but we're still profitable. And we got NQ, ES, and EMD. So all very similar performance across the indexes, which is what we want due to the level of correlation that takes place on these. Now, obviously, the profits and the drawdowns are a little bit different, but that's just due to the individual volatility and the tick sizes and how much they move in points. So the issue we're going to be trying to remedy today is sometimes price likes to break above this opening range, but then immediately fall back in. You can kind of classify it as a fake out, and on a very rangy day, which can of course hurt this setup, it can happen several times, and then eventually stop us out. Since the opening range low is our stop, we'll get in on this little tiny break and then eventually get stopped out. So this is just using the raw price signal. What I want to look at is using a smoothed price, which will look kind of like this, because it has a little bit of lag. To where we don't get those initial signals because our smooth price isn't crossing over the opening range high. Now, will that improve the overall result and baseline? I'm not sure.
I have a question. Would you
Yeah.
use like a simple moving average for like the smooth price or something else?
Yeah, that definitely would work. I have some others that I prefer, but they're all gonna achieve the same result for the most part.
Okay, thank you.
Yeah. So I like the potential to add this, modification to the entry because it doesn't take away from the robustness of the strategy overall. And what I mean by that is, for example, a member last night mentioned that maybe we should, see if a 200 EMA, only take the entry if it's above the 200 EMA. That would be a filter that's, heavily constrains the entries. And what that means is now you have a scenario where an amazing opening range breakout will occur, but you didn't take the entry only because price wasn't beneath the 200 EMA. And it's a lot, and with most people when they're building strategies, they'll add these constraints without proper testing, and all it does to the bottom line is just, really hurt any edge that might actually be there. So with a smoothed entry, we're still going to get in on every single opening range that occurs. However, now we might be able to miss some of those, well, bad signals, so to speak, that can definitely happen over a large sample size. So cool, so now we know the reason for adding this and how we think it will improve it. So let's go ahead and go to the builder. So if you look right here, on our first condition, we're just using price close, crosses above, opening range high, which is our main trigger. So all we're going to do is go to the indicator, and I personally like the Laguerre filter for doing things like this. I'll definitely share it, and you can take some spare time to read up on the Laguerre filter. But let's go ahead and plot that on the charts. You'll see that with the Laguerre filter, changing the period size doesn't affect, it doesn't change it the way it changes an EMA or SMA or a regular moving average. But even still, we're just going to set it to 3. We're going to hit OK. I'm not going to look to optimize it because there's just no point. Compile. Cool. So let me just take I do want to see the other metrics. So up here, I'm just going to add some more metrics. I want to see the average trade. And even though the Sharpe ratio on here is terribly, it's just incorrect, we will still just use it. And when I say it's incorrect, basically this should be a lot higher. But since the Sharpe ratio on the analyzer uses the, I don't know if you all know the formula for Sharpe, but the analyzer here uses the standard deviation of monthly P&L, which is great for a portfolio, but for a strategy, we want to see the standard deviation of the trade P&L as well as the standard deviation of the daily P&L. That gives us much better insight to the volatility of that strategy. That being said, even though this uses monthly standard deviations, a slightly higher value than the previous when we're comparing, does mean we made a little bit of progress. So let me remove the gross profit and gross loss. Profit factor, put that on the end. Okay, cool. So I'm just going to screenshot this right quick so I know what our current settings are. And this is with using raw price because I didn't save the, I didn't make a new version, I just recompiled it. But we know this is with raw price. So the ATR value here is 3. And I don't want to go back to the backtest page because then it'll reset my optimization page. So I'll just set the optimization from 3 to 3.5. Should be good. Let's just go ahead and run it. So it looks like it didn't improve the results, it actually hindered them. So we can look at the chart and see what's going on. So we can see here the Laguerre filter crossed above, and due to the lag, it actually crossed above, a few candles after, giving us a much better entry. So on this trade in particular, it worked out really well, but the data is showing that our idea might not work out. Well, that's interesting. So now we have an entry right here at, it's like the open of the following trading day. Gonna look at a few more entries and come back to that. Happened again here. So this looks like a little bug or something that might be the reason why we have worse results, because it's just entering a trade at the start of a new day. So let me change back real quick to just using price and see if that random entry is still there. Here we are back to this. And so now we're back to our baseline, and that random entry that was occurring at just the end of it, or the start of a trading day, is no longer there. So for some reason, or maybe it is, here's one right here, it seems like. So we have a time filter. I'm trying to think of why this might be occurring. We have a time filter that says we have to be greater than 9 a.m. the trender, or the trend direction on the ATR has to be blue, which we are here. And now this one says we have to cross above the opening range high. I think the root of this problem probably has to deal with the pre-session range, but a quick fix is to simply add an additional time filter, which I should have done in the first place, but I never did add that. So let me just copy and paste. Because basically, it's the opening range is over, you know, once the market closes. So it's entering where the opening range doesn't even exist, which might be throwing it off. So all we got to do is add a simple less than 4 p.m. for me. So that's but you haven't done any time of day analysis yet, so might actually tighten up that time filtering. So this is pretty interesting though, because I'm kind of curious to how this is going to affect the bottom line. Maybe these random entries, or I guess they weren't random, these entries that periodically occurred at the open of a new trading day, you know, improved the bottom line, or if it made it worse. Because this trade was, you know, I made some money on this trade. Let's go ahead and run it. So actually very similar, a little bit less profits. Let me see what the... Okay, so our drawdown is actually a little bit less now, which is good. Our net profit did drop slightly as well. Looks like the profit factor on the NQ is over 5 now, which is just kind of ridiculous, to be honest. But sweet. So let's go ahead and add the Laguerre back. Go ahead and zoom out. We definitely shouldn't be getting any more of those, you know, end of day entries, or not end of day, but start of a new day. Looks like they're all gone. I also am not a big fan of this happening. It seems to happen quite a bit, which we will definitely add some additional rules. But it makes sense. Basically what I'm talking about is when we break above the opening range and we get our trade closes on, you know, a random pullback, a harder than usual pullback, but it never even falls back into the range. You know, it just plays around and then makes a whole nother move up. So leaving a lot on the table there, and we can use some more, you know, money management tactics to try to take advantage of when that happens. I think I just saw another case over here somewhere. Kind of the same scenario here. So definitely some good opportunities for some improved money management. And definitely a lot of money to be made on the short side. But so this is another great example where we get stopped out and then price eventually starts moving a lot higher. So let's go ahead and add our Laguerre again. Laguerre. Go ahead and run this test. So results still aren't better. It's actually a lot less profit. And guess what that means is due to that little bit of lag, that missing out on those occasional fake outs that happen every now and then isn't worth, making a smoothed entry for. Basically, the data is telling us, yes, sometimes that happens, but you're better off just entering as soon as we cross above. Because our entries are a little bit higher, which is why we got less profit, and also because our entries are a little bit higher, we're now taking a slightly higher drawdown for whenever the trade doesn't work out. Perfect example of that here, where we, would have entered right here, but instead we entered right here. So what that means is our original illustration, our idea that this occurs a lot, because that's going to be the only thing that determines the success of this Laguerre filter we have. What would determine its success is if this happened, really often. And sure, it happens sometimes. We saw on the first setup it worked out great. But it simply doesn't happen often enough to merit using even a little bit of lag, just a little bit of lag to confirm that entry. So what I have to ask you guys is if y'all have any potential different triggers. Let's see what Flair said.
Maybe you can make some kind of trigger. So you have the ATR indicator with like the blue line that makes us close to position. Maybe you can make a condition that requires the blue line to be in the opening range, so it doesn't close prematurely.
Oh, well, I think you're talking about potential exits.
Yeah. So
Right, right now we're trying to figure out a potential trigger that might improve our results, and we're definitely going to come back to exits and money management and whatnot.
okay.
Flair says, what about an OHLC bar? I've increased the bar size to say 10 minutes, then do a cross over the line. Current 10-minute bar closes over the threshold and the prior bar is below. That would introduce some time lag. Idea would be shorter time bars, say 1 to 2 minutes. They may cross in reverse, but if a longer time bar, 10 to 15 minutes. Well, Flair, that kind of falls right in line with the lag nature. We can definitely give it a shot, but I believe it's going to probably give us similar results. But let me think for a second. Might have to save a new version of the strategy. So basically, you're just saying that whenever a 10-minute bar crosses above, it seems like that's all that we're doing here. 10-minute bar closes above the opening range high. Okay, I think in order to build this in a condition builder, to kind of like you're just gonna kind of think about it a different way. But what you're actually saying is, so if the 2-minute bar closes above the opening range high, then we want to see it stay above the opening range high for maybe 4 more bars, and then we enter. Cool. So let's go ahead and try this out. I will go ahead and make a I'll save a variation. I mean, in regards to using higher bars, you would, I mean, the same effect would be 5 minute bar. It would be essentially just running the strategy on a higher time frame, honestly. Because if the 2 minute bar closes above the opening range high and stays above there for 5 more bars, then that's equivalent to the 10 minute bar closing above the opening range. So we wouldn't be susceptible, like if we're using a higher time frame, then a fake out on the 2 minute chart would look like, a wick on the higher time frame. So I think really, well, I might not need to make another variation for it, but if that was the case, then we might benefit from just testing on a higher time frame, unless you think there's like some maybe additional benefit to just looking at only the 2 minute bars and waiting for X amount of bars to stay above before entering. But I do think that is pretty much the same thing as running the strategy on a higher time frame. As far as the trigger goes, of course, the stop loss would be different. Well, let us look at the chart a little bit more, because if we're thinking about making a trigger, we don't want to hinder the strategy. Of course, ignore this blue Laguerre filter because that is no longer in the strategy. But we don't want it to hinder whenever this occurs. This right here is best case. We close above, and then we keep on going. And we thought that maybe introducing a little bit of lag might improve the quality, but it turns out it doesn't. I think our win rate, even our win rate dropped by 7%. I'm just letting y'all think for a second while I'm looking at the chart as well. So I have a slight idea that shouldn't hinder the strategy. It will introduce lag sometimes, whereas sometimes it won't introduce lag. Let's go ahead and build that real quick. Let's see, we have right now we have close cross above opening range high. Let's set it to close greater than opening range high. And then let's add an oscillator. We'll choose one that I like a lot. We'll use the Double Smooth Momentum by William Blau. We're going to say that the DSM needs to be greater than 80. I might come back to that threshold, and I might optimize the period slightly. Right now we'll leave it at default. So now price just has to be greater than the opening range, but it can't just be greater than the opening range. You need to have some momentum using this smooth momentum oscillator. So what that means is sometimes when price breaks out of the opening range, it's still going to get us in right there because there's going to be momentum behind it. Greater if market gaps up, we'll get an auto. Well, we currently have a time filter. So I don't know if you're referring to something else maybe. We're still looking at only the close price. So if the close is greater than the opening range high within our time filter, then, as long as we get some momentum on our side as well, we'll go ahead and enter. Yeah, I think I get where you were going with that. This shouldn't really affect anything a whole lot. In most cases, it's going to get us in the exact same time. It just allows us to enter in kind of anywhere above the opening range as long as we get that momentum. So I think the DSM will need a slight optimization to kind of see its potential here, but we'll just test it out right here, compile, and then see how this looks on the chart. I don't remember how, strict the DSM is. So we can see here, pretty much got us in at the exact same points. Because this was a pretty strong bullish move right here. And then we see here the potential issue that might come along with this. However, worked out really good right here, where we exited and normally we'd be done, but we got back in and banked on this next move up. And then seeing this makes me wonder if this is happening a lot. So real quick, I want to look at the hour of day analysis by entry time. And we can definitely see here that this is happening pretty often, these later day move downs, whereas the first part of the day, it's working out a lot better. And we'll see if this is correlated with the other products. So this is on EMD. Looks like it isn't the same story, but very little total profit starting at 1 p.m. Same story on ES. Same story on NQ. Of course, they have R2Y. So I think right off the bat here, we can go ahead and change our time filter and we're going to say that time needs to be less than, we're on a 2-minute chart, so 12:58 should do the trick. So basically they're saying we're going to trade the first half of the day. Honestly, normally I cut off at 11:59, but noon seems to be doing okay. Maybe those midday pushes after lunch. So we can go ahead and run this again. See what we're looking at. So it did increase our profit some. Still doesn't beat our baseline metrics. We can go back to the chart. See a couple of instances where this is happening. Okay, cool. So I want to try a very slight optimization for this DSM. So we're just going to add an input. I think the default is 14. Go back to the DSM. Of course, there's a lot of parameters you can optimize here, but the only thing I'm going to even slightly optimize is going to be that period. Hit OK. Now our baseline uses the ATR at 3. So I'm not going to optimize both of these at the same time. That just increases the chance of overfitting something. So for the DSM, we'll just do 10 to 50 increments of 10 and see what we can get here. Maybe the DSM needs to be a little less responsive. did improve our results, but still not beating that baseline. And you'll, just like what I was saying last night, you'll find that once you create once your core strategy is just a simple, robust way to exploit a pattern, that it's hard to improve. And a lot of things that you think will improve it never do. But it forces you to critically think, why doesn't this improve it, and what actually would. So just for good measure, I'll just see if it takes advantage of a longer period and maybe see why if it does. So 50 to 100, increments of 10. Worse. So given the formula, there's a lot of different types of oscillators. So I'm not going to give up hope on this idea just yet. I want to try 2 more. We're going to try the Mesa stochastic. And we're going to be using the K value. We're going to set that period to our input. And once again, run it from 10 to 50. Maybe see if just slight modification in the formula gives us more reliable signals. Honestly, in a lot of cases, it's going to be giving us those continuation signals. Same exact story with the Mesa. We got the stochastic momentum index. We'll do the good old stochastic RSI. This will be the last one we'll try. Then we'll go ahead and see what else we can do. Worst results yet. Stochastic RSI is really sensitive, so it might benefit from a higher period. And no good. So one thing I am kind of curious about is if we took away these continuation trades, meaning we only used it for the initial trade. Also, we put a time of day filter on this, and I'm kind of curious to see if that time of day filter improved our baseline. So here's our baseline without the time of day filter. So let's bring our strategy back to its core. Price close crosses above. We have that time filter, so let's just see. ahead and remove this DSM. Let's see, we got 8,700 or 87,000 on 3,500. So it did decreased our profit slightly, but like, good grief, our average trade went a lot higher. We took way less trades, so we got rid of a lot of trades and kept almost the same amount of profit, which is a really good sign. That means we effectively removed a lot of losers, a lot of useless commissions. Maintained the same profit nearly lowered our drawdown, boosted our profit factor, and dramatically increased our average trade, having that time of day filter. It's another thing to note how a lot of times the things that might improve your strategy, isn't what you would initially think about. Typically, you want to add indicators and rules, whereas here, we got drastically better results just by cutting down the amount of hours that we give it to trade with. But so real quick, obviously, so we're probably gonna move away from triggers. Our attempt to improve the trigger just was not very successful. But that's what the orb channel is in our Discord. So if any of y'all can think of a potential improvement to our trigger, then we can definitely post that over in the orb channel, and next session we'll see what we can do with it. The next thing I want to work on is scenarios like these where we get out of a trade leaving a lot of profit on the table when we get this continuation. Just give me 1 second and I'll be right back and we'll start working on that. All right, guys, I'm back. So I think the approach for this to take is an approach we should take. Is an approach you can take for a lot of trend strategies. But first, Evie, you can go ahead and give me what you were talking about.
You mean the ATR thing? Sorry, do you mean the ATR thing? Uh,
Yeah, you were saying something about I guess like an alternative exit type deal.
yeah, so my idea was to only exit the trade if the ATR line, like the blue line that
Mm-hmm.
also decides the trend, to only exit when it's in between the opening range, so the blue zone.
I see what you're saying. Yeah, you want the ATR to be inside of the opening range
Yeah,
for us to exit.
the line with the blue dots. Yeah.
Let me see real quick. So only you weren't on here for a session or two ago, but what ended up happening was we would be exiting the trade while the ATR was inside the range for a loss. Whereas we wanted our exit for a loss to be if we broke beneath the low of the opening range. And so we actually ran a lot of variations um, on that. But we could make a rule where I'm trying to think so that won't produce any conflict with the other rule. Off the top of my head, I can't think of a way to reduce conflict, but I think I have an alternative method that you might agree with more. And that one being is normally when people, um, trade trends, they scale out some. So let's say we have, you know, a moving average here, a moving average here, and yeah, that'll be enough. So let's say we enter long with two contracts, price comes on up, we close beneath our first exit for a loss just in case if it's a complete reversal. It might not be a complete reversal, but if it is, we went ahead and hopped out, in which case we still have another contract to keep on going, and then we'll hold that one until our more aggressive stop is taken out. Does that make sense? So in this scenario on the chart, we would only exit one contract here, and then we'd still have an additional contract to keep on going. And what we could do is once we exit one contract, we could tighten our stop loss maybe to a break even, maybe to just a little bit below our entry price. That way, we're just playing with the house's money at that point, and we're not risking anything. Does that sound like a pretty good idea?
Sounds great.
Let's see. So let's go back to the builder. Things might get a little more interesting here. This is orb 3. Let's see. So our initial condition, we need to enter with 2 contracts now. And now this condition for our ATR, which is where the ATR has to be, changed to negative. And if we're in the money, which is the unrealized profit greater than 0, we exit long. We're just going to specify that as 1 now. However, we also have to specify that we only want this to occur if our current position size equals 2. If not, then whenever this occurs, then it'll just execute this action 2 times in a row, not achieving what we want. So position size equals 2. We're in the money. ATR changes to -1. We exit 1 contract. Now, for the rest of our position, we got to think. Because when this occurs, we're currently red. So we can't just say, okay, well, when it changes to red, exit for our other contract because we're already red. So I think initially maybe we'll just keep our initial stop loss, which is, pretty far away. But we'll just run that and see what happens. Position quality equals 2. Then we have the cross below the opening range low. But so now we have an interesting scenario because the default quantity is 1. But we can't set this to 2 because sometimes we're going to only have 1 contract when this stop loss is hit. And now sometimes we're going to have 2 contracts when this stop loss is hit. So we can't set it to 1 and we can't set it to 2. But luckily, we have a function where we can set the quantity to the current position size. So position.quantity, and that makes things a lot easier. So let's go ahead and compile that. Now, honestly, at this point with this, since we're using the initial stop and everything, I don't really think it's going to improve results, but we're going to see what happens and then build on that. I didn't take a screenshot, but we're at like 87,000. So we do have a lot more profit, but don't let it be misleading. That's just because of the increased position size. Our drawdown has more than doubled. Let me look at that ratio real quick. So it really affected our profit to drawdown ratio. And so here we can see the benefit of this approach. This leads another idea. What if we have it, what if we have it exit our second contract whenever it changes to red again. But first, let me see. So good scenario there. So I need to think for a second on the builder and how to do that. So I might need to use a variable. Let's think. Because when this happens, we're going to have one contract left with the trailing stop as red. So position size is going to equal 1 and the trailing stop is going to equal -1. So maybe create a variable that is true so when this happens, it'll set it to false, make another one, and say, well, actually, just duplicate. When the position size quantity is 1, and now +1, we flip this back to true. Now, if it's true, and it equals 1, we exit long position one. Let me just review that for a second to make sure it's going to do what I want it to do. -1, we're in the money. 2, It's making my brain hurt, but that might be it. Let me just compile it. And look at the chart, and the chart will tell me if it's doing it right. So I think what might be the issue is it's always set on true to start out with. And so here it's not getting us out. Equals true. Okay, I think I might have overdid it. Let me do a pre-exit and set it to false. So position size equals 1. Trender is 1. We'll set pre-exit to true. Then if we are negative and pre-exit equals true, then we exit. I can just close that condition out. So 1, we're positive, true, by default we're false. -1, and we're true, and we exit. Not what we want. That's why I switched to Boolean, because it can't do that at first. However, it shouldn't, because, let's see. So already we're false. Size equals 1. Gonna have to come back to it. But I think what might even be a better solution is using this concept. So we could actually use a tighter trailing stop and then a weaker trailing stop. So basically 2 ATR deviations to quantify the trend. So let's see how to do that. I can remove these. So our first exit is ATR1 equals a -1, and we're in the money. So we can duplicate this. Now we need a second ATR, ATR2. So now I'm going to say ATR 2 equals -1. But in this case, our position quantity is going to be 1. So that should be all we have to do there. And using 2 measures for trench strength is pretty interesting. So let's see what happens. We got the initial one that our best results gave, it was 3. So we're going to leave that one at 3. Actually, might get very different results since we're doing scaling. So we're going to do it from 1 to 5 increments of 1 on both of them. Because ideally, I would like the first one to be really tight to capture any momentous moves that might end up just being a overall reversal after it exhausts out. And then the other one carries for longer trends. Let's see what happens though. Have slightly more iterations. Because it has, even though it's not a lot of iterations on just the parameters, it also counts the iterations on all the other products as well. Probably should have just done the second ATR. Because now NinjaTrader might start glitching on us. Yeah, a lot of times it will freeze like that and then come back in. So if you ever see it freeze when you do an optimization, just give it a little more time and it might come back in. If it stays froze for like 10 minutes or something, then you're gonna have to just manually end it. Almost there. Now hopefully we get higher profits and kind of the same or just slightly higher drawdown. So pretty nice. We definitely have our highest profit yet. Our highest average trade. Let me go ahead and check out that ratio. Oof, it's pretty damn good actually. It's 25 to 1, making it it's our best yet. So, but definitely I see opportunity here. Maybe it's just whenever we take some profit, or actually in this scenario we didn't take any profit. We moved over here, so we can see even over here in these super deep pullback scenarios, we still got stopped out. But the data is telling us that because if it was better to use a longer deviation, then it would have made this second one much lower. But still leaves some room for improvement. And it kind of flip-flopped them, but it's the same results because they both just exit one contract, but they kind of flip-flop them over here. Let me use just 3 for well, it doesn't really matter a whole lot. We'll just leave it like that. 2. So another variation I can think of is, simply once we exit one contract to move our stop loss to the opening range high. But even still, this is our best results yet using 2 ATR deviations. We can check out some equity curves. It's a ridiculous opening range breakout on that day. Good grief. Look at the rest of these P&Ls. I am just shocked by this win rate, to be honest. There's some pretty, there's a lot of winning. I mean, it's like 80%. Like, what's going on? on a breakout setup? It's pretty interesting. Cumulative, our curves are looking a lot smoother for individual products, for sure. Using that, that double deviation stop. And of course, can't see our combined equity curve. Got to use Excel for that. But super cool. Before I sign off, we'll just go ahead and add some out of sample data just for the fun of it. So where we got 3 and the 2. HER 3 and the 2. And for out of sample, we're going to double our sample range. So we did the last quarter of 2022. We're going to add an additional quarter to run it from July Well, first let me take a screenshot. So this is our current best result. Still so much room for improvement, but can't argue with the numbers here. Ninja Trader's glitching again. You'll usually encounter this once you run an optimization or something that was just too much. Then it'll just keep on glitching and doing dumb stuff until you restart it. That's why you gotta save your workspace. And then once you save your workspace, you can close it out and it'll open it back up the same way. So maybe we'll be able to get by running this test without it freaking out on us. So we're doubling the sample size here. I just want to see the average trade and the win rates stay consistent. Not, I mean, you know, within about 20% would be nice. So if the average trade is above 400, keeping that percentage profitable. And we'll look at the performance of each individual month as well, just to get an idea. So for here, on the first quarter, you can see we're kind of stepping down. But on the NQ, our best performing product, we were profitable in all 3 months. So let's just run this with the additional 3 months. Looks like it kind of follows the same pattern. I have 1 bad month and 1 bad month that was, that the same product? It's not, my bad. Okay, so this is the NQ. 3 out of sample months. We got 1 really good month, which is our first one. Another mediocre month. Of course, we're just looking at the average. That's what I care about. So meaning like, you know, what's the average? If you average out these numbers, what's the average return? If you average out these numbers, what's the average return? Looks like this average might be a little bit lower, of course, due to this red month. And the drawdown also increased due to this pullback here. Win rate stayed, I think the win rate actually increased with adding sample size. So that's very unusual, to be honest. Average trade got knocked down some. Starting to get more realistic numbers. Let's see the equity curve. Where is it? There it is, cumulative. So this is where that drawdown occurred. Had a really good smooth start. Encountered that drawdown. And then back on the path. Well, now I'm just curious. Let's see if we can get away with adding another quarter. So 3 December. Oof. Now it's showing its true colors here. Let's go to monthly. So it had 2 really bad months. We could definitely maybe look at that chart in the future to see, you know, why the opening range breakout pattern just wasn't happening often enough. Of course, maybe it was a very bearish month, and maybe the opening range breakout to the short side performed much better. And I think this value over here is definitely going to be our average value, kind of like that $5,000 to $10,000 range. Whereas these are kind of outliers, these massive green months. Let's go ahead and run it for the rest for the year. So let's just do the whole year of 2022. And for the NQ, looks like now we're red on a couple of months. But had a terrible start to the year, and looks like we improved towards the end of the year. So second half of the year did pretty good. First half of the year, not so much. Now what I like to do is see we added a couple of things to our baseline, whereas our baseline was the most robust version of this strategy. So I want to compare this really quickly to our baseline. Let's see, orb 3. Let me just... One second. Gotta resave it. I'm just taking this strategy back to its baseline. Saved a different variation of it. Cool. So I got it saved. I'm going to leave this open. NinjaTrader is just having a really hard time. It needs to be restarted. So we'll go to the orb base. Showing the ATR2, but that is not in the strategy right now. Let's leave that at 0. I just didn't remove the parameter, forgot to. And our base used the, it was 3. The indexes on the 2 minutes. Should be good. Save my workspace. Okay. So this was our baseline. Combined results of 5,000 minus 22,000. And with our slight adjustments, we did do, quite a bit better. Now, one of the things I did with this strategy, just for the sake of the live stream, is everything I did initially was on a really small sample size. Whereas initially you want like at least a year or two. Just when y'all start doing this yourselves. Let's see. Let's run it real quick on just 2021 to see what's going on there. See if 2021 was a good year for trading the opening range breakout to the long side. You might be able to get away with it. Oh, well, there you go. It's like opening range breakouts were just amazing the first part of the year. That's on EMD, our worst performer, whereas NQ was kind of profitable throughout the whole year. So that's good. And so this kind of illustrates a couple things. One being having realistic expectations, and two kind of falls in line with expectations again, but it's just the reality of algorithmic trading and why it's so important to have a portfolio of strategies. And once you have that portfolio, your only job is to monitor and basically adjust the what's the word? Depending on what you're currently seeing. Whereas in 2022, breakouts to the long side weren't doing very good for the first part of the year. So might have decreased the position size or turned it off. Once that pattern became more prevalent, you turn it back on or just adjust which assets we're using it on. This all falls in line with portfolio management, and it's a whole It's a whole shebang in itself. But the way you need to approach strategies when you're looking at performance like this is, remember, the only thing that makes a strategy not profitable is if that pattern isn't occurring enough. There's nothing wrong with the strategy. You can't get mad that your opening range breakout strategy lost money in the month of March whenever there weren't even any opening range breakouts. So yeah, definitely get into some other things into the next session. Probably explore some more money management options with the next one. And then eventually look at some leading indicators that we might be able to use to filter which opening range breakouts we decide to take. But of course, we got to be careful there. Alright, guys, that's it for this one, and I will talk to you guys soon.
Thanks a lot.
No problem. Have a good one.